What's going on, everybody? Welcome back to the greatest channel on earth. Today, we're going to be looking at a handful of 10 baggers, companies that have gone over 1000%. We're going to look at some key financial parameters to determine how we can set up a screener to find these potential 1000% runners before they make their move. So without further ado, we're going to turn our attention to FinViz and go through a few different screening options that I put together for us to find 10 baggers and go through that list and see how we can find 10 baggers today, tomorrow, and in the future. But first, we're going to hit that subscribe and like button. All right. So we are on the world's greatest website, FinViz. So I created a screener to find stocks that have gone over 1000%, but we need to be thinking in mind that these are stocks that are going to be um, essentially honed down to past values that we want to see today that could go 1000%. So I'm going to run through these different parameters and hopefully that will guide us in the right direction. So in today's, from today's scan, we're looking at the EPS growth over the past 5 years as positive, sales growth over the last 5 years as positive, with gross margins over 50%. That is very high. You can probably take this down to 30%. I just wanted to have a really high outlier here to give us some clear potential candidates. IPO date was more than 10 years ago. The performance is 10 years over 1000%. That's a 10 bagger. Quick ratio over 1, meaning that the company is healthy today. So over that period of the last 10 years, the company going from the past value to over 1000%, we want that company to be working towards all of these factors, going over 1000% returns, having a quick ratio over 1, having very low debt, and having very high margins. Now, when we look at this list, maybe they didn't have high gross margins when they first started out. So what we're going to do is determine if that was indeed the case, and we're going to go ahead and build from scratch. So what we're going to do, we're going to reset our FinViz screener here. We've got our results here. So we have Arista Networks, Appfolio, Axon Enterprise, Camtech. You can see that here. We've got some well-known names: NVIDIA, Taiwan Semi, Microsoft. So let's look at some lesser known companies, potentially Cadence Design Systems. Let's check that out. Corcept Therapeutics, a biotech company. We need to make sure that that biotech company is making money though. And let's look at ServiceNow. I know ServiceNow is very popular, but we're gonna figure something out. So just stick with me. We're gonna look at the bigger picture. They do make money, good. And then ServiceNow. So what we want to do is look at where the stock was trading at a point in time before it ran up 1000%. So we could go back as for ServiceNow, the current stock price is 867. So we want a stock price essentially before 2017. So what we're going to do is we're going to go to way back. This site that we're looking at right now essentially allows us to go back in time. So we're at ServiceNow and we want to look at the daily. So what you have to do, this is a fun trick. Click here and then you want to capture the URL as soon as it loads like that. Because watch the URL change. It didn't change, which is good. Yeah, so that is not... See how it loaded the monthly there? We do not want that. We want the daily. So we have to start from scratch and then go to now. This is what we want right there. So we've got this here. That's exactly all we need. All right, and we said before 2017, so here's 2015. So while that's loading, let's look at CORT Therapeutics. Wow. We want to look at this before 20, basically before 2017 as well. So we're going to go back to home. We're going to type in CORT, and we're going to get the URL right there. Perfect. Wayback website, type it in here. And I said before 2017. Let's look at, I think 2013, 2014 would be nice. 2013, 2014. Let's do 2014. All right, so we can see ServiceNow is trading at $77, which would have been over a 10x at this current level. You can see currently they're not profitable. As of today, they are profitable, which is good. CORT was trading at $2.41. Today it's at 71, so that is very good. And then Cadence Design, I mean, this one's just gone insane. So we're going to go from the beginning. CDNS. Grab that. And go to Wayback. All right, and with Cadence, we want to look at basically anything before 2017 again. Let's do 2016 right here. All right. 21. So 10x that'd be $210. They were making money. Perfect. Okay. So now we've got 3 different examples of stocks before they ran 1000%, which is insane. So what we're going to do is we're going to look at all 3 of these and build a scanner based off of that. So we have our scanner here, and we can see all of these have a gross margin. Let's say it's 63%, 97%, and 86%. That is pretty insane. So let's do gross margin over 50%. Wow, that is incredible. Okay. We have one that's not profitable, second one that's not profitable. This one is profitable. So market cap was 7 billion, market cap is 271 million, market cap was 12 billion. So it's insane how all of these are different. They fluctuate so much. Quick ratios over 1 there, quick ratios over 2, quick ratios over 1. So let's include that here. Quick ratio over 1.5, that's fair. 1.8, 2.9, and 1.9. So that is good. We went from 1,300 stocks down to 762. That is good, good, good. All right. Institutional ownership, 87%. That is high. 58%. 92%. So we could do institutional ownership over 50% here. Over 50%. We're now down to 440 stocks from 762. Crazy. A lot of insider selling here. EPS next year was very positive. EPS next year, very positive. EPS next year was positive. So that is something we can include here. EPS growth. EPS growth next year. We want positive. We can do over 10% there. We're now down to 285 stocks. All right. Okay, sales quarter over quarter, 58%. Sales quarter over quarter, 210%. Sales quarter over 8%. Ooh, okay, so we can do sales quarter over quarter over 5%. There we go, at least. We're down to 212 stocks now. Again, not profitable. Average volume was 1.2 mil, 195,000, 2.9 mil. So the lowest was 195,000. So we could do average volume over 190,000. Average volume. Oops, wrong. Can I go back? Yeah, I meant to go here. Average volume over 100,000. We're not on 208 stocks. That didn't really help us at all. Volume. Okay, let's see. We got the quarter over quarter, EPS over the past 5 years negative, EPS past 5 years positive, EPS barely positive. I think all of these we have insiders are selling. Insider transaction minus 90, insider transaction minus 11, that's a key data point. We're going to capture that. Insider insider transactions negative. We went from 208 stocks down to 165. All right, we're almost down to a good batch. Forward PE is very expensive. Forward PE nothing. Forward PE doable. Okay, we have debt here under 1, debt here very high, debt here around 1. Price to sale 18, price to sale 15, price sale 4. See, these are they vary so much here. Let's see what other data points we can grab. CDNS was actually profitable back then. Good for them. Institutional transactions, positive, negative, positive. Sales past, let's see. Sales past 5 years, very positive. Sales past 5 years, very positive. Sales past 5 years, positive. That's another one. Sales growth past 5 years. We can look at over 10%, I believe. Sales 73%. Wait. Sales past 5 years 73, sales past 5 year 120, sales past 5 years 12. So that was conservative. We're down to 117 stocks. Okay, we're gonna keep moving on. Dividend growth. They weren't offering dividends back then, I don't believe. Yeah, we don't want the company to offer a dividend, so we can get this dividend. Dividend yield should be none. We are down to 108 stocks. Okay. The honing continues. This stock is above all of the SMAs. This is below the 200. It is below all of the SMAs. So this is when the stock was running hot. RSI 65, RSI 48, RSI 62. I mean, that's a data point. We can capture RSI above 30, basically. Not overbought. No, not overbought. Less than 60. I think all these are less than 60. RSI 48, RSI 62, RSI 65. So over 40%, over 50%. Can we do that? Less than. Or, okay, greater than 50. Greater than 40. Okay, we're down to 86 stocks here. We are getting close. We are getting close. What are the PEs on all these? Yeah, not tracked. Shares outstanding 300, 100, 150. Okay, we can do shares over 100 million. Shares outstanding. Over 100 million. That's crazy. Wrong scanner. Shares over 100 million. Over 100 million. Okay, we have 86 stocks. Now down to 51. All right, we're almost there. Almost there. All of these stocks were under $100, under $77. Okay, so price under doesn't have it. 50 to 100. No, because CDNS was like cost was 2, this was 21, so it's not really. Can we do price over? Price over $2, that doesn't help us out at all. Under, yeah, I mean, this price doesn't impact us at all. Let's see. Target price below. This is below the target price. This is above the target price. Wait. All of these are below the target price. See, the target price here for analysts is 25. The stock was at 21. Analyst target price was 333. This is 241, and 85 was the price target here. Well, this was 77. So the stock price is below the target price. So that is good. Target price right here. Below the price. So we have 51 stocks. Now we're down to 9. Let's just look at a firm. We're looking at a first example here, just making sure that's correct. Target price was 73. Okay, so I had it the wrong way. So target price is above the price. Okay. I was going to say that was a pretty drastic drop. We're now down to 42 stocks. Okay. We're now down to 42. And again, these all hit 10 baggers that happened in the past. We all want these to be all USA stocks. That's fine. I mean, if we limit ourselves here, we could be at a disadvantage. We go from 42. Okay, so we're still within the same price. Institutional transactions. Institutions we're probably buying. So we positive, negative. Okay, no. Let's see. Earnings per share quarter over quarter, very positive, very negative, very positive. Again, a lot of mixed signals here. Debt was very low. Yeah, debt was high here. Price to book 89, price to book 28, price to book 6. Okay, let's go to the price to book here. Let's just see. See, that's too much of a variance going from high to low there, unfortunately. So, let's continue to look for other metrics that we can. Going back to here, shares float very high, shares float very high. So you know what? That's another one we could look at. Shares float above 80 million. Shares. That doesn't help us here because right now if shares outstanding over 100 million. So that does not help us. Short ratio, very low, 22, 4. So again, varying numbers here. RSI we've captured. 52-week low. That's way off of the 52-week low. This is way off of the 52-week low. This is also way off the 250-week low. That's something huge. 52-week low. 50-day. So, wow. We could do 10, 20%. I'm on the wrong one. Come on. 52 over 20%. Okay, now we're down to 20 stocks, and these are digestible by all means, just because we are down to one page. So here are several companies that are potentially 10 bag companies that could go the distance based off of what we looked at with ServiceNow, Cadence Design Systems, and Corcept Therapeutics. So we're going to go ahead and save this as our triple 10 bagger. So we've got 3 different 10 baggers that hit all of these criterias. I feel very good about all of these. In the next video, we'll go ahead and review a handful just for fun. Thank you so much if you made it this far. Consider subscribing and hitting the like button. If this does not make sense to you, let me know. I can break things down another level and we can take things down a notch. Otherwise, see you in the next one.